I'm Doug MacKenzie.
And I'm John Ward.
And we're the co-hosts of the ABCs of IBC podcast.
Come join us as we share our unique perspective on the infinite banking concept as the creator, Nelson Nash, intended.
Welcome back. How's it
How
going,
are you
John?
today, Doug?
I'm all right. How about you?
Yep, about the same. All right. But always fun to do this, so.
Amen.
That's the upside of everything. Yeah.
Yeah, it's not too bad to get together and chat about something that we like talking about.
Hey, yeah, like we're not trying to convince each other, right? We're maybe in some ways we're always reaffirming with each other, right? That
Right.
This is that we got our heads on straight.
Right. Well,
and
that's
yeah, that remains to be seen.
right.
But
we're making it through life somehow.
Yeah. And,
one day at a time.
Yeah. It's really just hey, do we understand this the way that it was intended to be comprehended or understood? And
well, we're still students of this too. So,
yeah.
I think that, and we'll be students of this for the rest of our lives. We might have more experience than some of our listeners, but maybe not. And so we're constantly trying to keep an open mind and learn more and understand this on a deeper level.
Yeah, and again, we've mentioned, hey, read, Becoming Your Own Banker, and you and I were talking just prior to this, before we hit record, and Nelson, I love him. I love what he did, and all the effort he put into this, to then go out on the road and share it with financial advisor type people and insurance agents, and but it's not the easiest book to follow, even for people that came to this with a real interest in doing this for a vocation, doing this for work. They may have already been numbers people, right? And financial, interested in the financial world, which many people aren't really, right? They kind of need to be, because they're thinking about, how do I make things happen, and how do I make them better for myself financially, and how do I prepare for maybe days where I don't work, but it's not their love. And so we tell them to go off and, read this book. And part of the reason we're doing this is because we're trying to help people by sharing what is sort of the evolution of our own thinking, right? That we've picked up things that we hadn't picked up before. And I'm much of I've got a lot of books, and I do a lot of skimming, or, reading a certain amount and then not reading it all, or I think I got the whole story, and then I'm spacing out while I'm reading, and there's all kinds of ways I've kind of consumed content over the years. And so I want to jump right into this, if you don't mind.
Yeah, absolutely.
So today's topic is, this idea that not just obtaining financing and getting approved or what have you through a lender, but what is the cost to you to actually acquire that financing? And that cost could be strain on your system. It could be cost of time. It could be actual expenditure of money to all those things to acquire the financing.
Well, that's a good point. You brought me back in time to, getting a mortgage, getting a home equity line of credit. I just thinking back to that those were both, especially the mortgage, stressful events, right? I mean, It took a lot of time, a lot of paperwork, a lot of justification, going into branches to sign things physically, get notarized. A lot of work.
Yeah, and it's a big undertaking, right? To when you do that, you've never done anything quite that large financially. I mean, at least most people, I would say, and they don't even know how this is really going to work out. They get approved maybe eventually, right? But even then, they might be nervous, right? I remember I had my first um, first house built. I had found a piece of land and then went to a builder and said, "This is all I've got. Can you build this house?" And he said, "No, I can't build that house." And I go, "How about this house?" And he goes, "Yeah, I think it was a starter home, right?" And I he was kind of he is in the construction business. He was a foreman for a big builder in the area, but he was starting to moonlight, and he had a realtor that he was going to work with to help him market himself and so forth. And I knew this realtor, and so he's the one that got all the paperwork going between me and the builder. And I called him uh, probably, I don't know. I called him, and I was a mortgage officer. I was helping other people get mortgages. And I was nervous about what my payment was going to be with taxes and insurance, right? My principal, interest, taxes, and insurance, the whole kit and
The whole
caboodle.
combo, the whole 9 yards.
Yeah.
Yep.
And
Yep.
I literally called this realtor. Charlie was his name. And I said, "Charlie, I don't think I want to do this." I was literally that stressed out about it. And thank goodness he talked me off the ledge, because
Mm.
that changed everything. And it's weird. I mean, I'm almost embarrassed. Like, what the heck? And it was like 50% more than I had been paying in rent. So, I don't want to go on and on about that, but it's that alone is a cost. Um, is the worry, in a sense, right, that I had.
Well, and
And
there's a lot
so,
of unknowns when that is not there's not a guaranteed outcome there also. I mean, I remember I wasn't at ease with the whole mortgage process, even though like in theory I knew I should be approved because my wife and I had good jobs, and we saved money and all that kind of stuff. But up until they did the appraisal on the house that matched with what we offered, I
right.
wasn't I wasn't at ease, because at any point they could have pulled the plug.
Yep.
So
Yep. Exactly. Right. And so even trying to be excited about it, right, is like I've got to tamper that down, because this might not happen. Like, everything might fall apart at the end, and we've got ourselves all jazzed up about it, and then it doesn't happen. So that isn't the crux of this whole episode, but I did start at the section of the book which is starts on page 31, which is the golden rule, and that starts out by you know a play on the concept of treating others the way you want to be treated, that golden rule. But those that hold the gold or own the gold make the rules, meaning those who have access to capital, they do paint the terms of how this is going to go. And, you'd rather be in charge of your own pile of gold and write your own deal, your own terms. And, but there's a bunch that goes on in just a matter of 2 pages. Um, But one of the things he states is capital is a responsibility and should be treated with great respect. That's one thing, right? Is kind of like what we've talked about last week, which is maybe respect the fact that your capital is worth more money, even more than what the insurance company might be lending against your capital for, or what rate, so you could, charge more to yourself and to others. But he uses this phrase, a word of caution is in order. And then he goes on to say, which I don't know really what the caution is about, but it's more like, hey, understand this. Don't think that everyone must conduct his financial affairs in the way that we're talking about infinite banking, right? Like, just because everyone's not doing it doesn't mean you shouldn't do it. He says it's not a numbers game. It's not about, hey, everybody has to be doing this for it to make sense. And he goes on to say individuals can reap the rewards that such discipline yields, which is the discipline of creating your own capital pool. And
when he
to
talks
me,
about
that's,
discipline too, he's talking about, having the patience to fund that capital pool. We hear a lot, hey, I want to pay premium, and then I want to, I want to be able to like have access to all this money like right now.
yep.
And that's not the way that this works. I hear, I've had people come to me that, I have this amount, like I have $200,000 and I want to put that into a policy and I want to have access to $200,000 right away. It doesn't work like that. This is a slow and steady game to fund a banking system, and then you get access to very beneficial leverage, and really the best financing available anywhere that I'm aware of. But
Yep.
it is a slow and steady game, right? And so it's important to keep that in mind. Just wanted to make that quick note. Sorry to interrupt, John.
No, that's great. That is, uh, but it's funny, right? These words, I'm going to say it even if it isn't really true for all listeners. Um, but sometimes we think like discipline, we think of budgets, and we think, right, when it comes to finances, right? Like it doesn't sound like fun. It sounds like limiting yourself, right? Oh, I got to be disciplined. I've got to stick to this regimen and I got to keep doing it. And it sounds a little like, yeah, drudgery. Um, but actually, it's probably the opposite because it's so freeing.
Mm.
Um, I understand, that we don't want to be disciplined, and, some people do, but a lot of people, yeah, we just want to go out and have some fun and live life. And, uh, but for the short time frame of effort to create this banking system, the yield to you and the fun and joy of it, will, in short order, is going to show itself. It's a different way of doing things, but it's not about pain. It's not. No, it's not about pain. It's not about, oh, this is drudgery, to me, anyways.
Well, it
And I'm
is, and
not the
it's not
most
that long in the
disciplined
long
person.
term. Yeah.
you know. Yeah.
Right.
Go ahead. I'm sorry.
No, you're right. I mean, it in the grand scheme of things, it's not that long that we're talking about here. And it's not long in the long term like people are used to. It's funny because people will tell you that they don't want to lock their money up for that long. Like it's I mean in reality it's not really locked up for more than, I don't know, depending on the insurance carrier, like a few days to a few months. I mean, you're going to have access to some of the premium that's been paid almost immediately. But to build something that's been, what we might consider, fully funded, you're looking at less than a decade. Not until all premium's been paid, but until we get to the point where what we have in the system exceeds what we've put in. But people think that that's too long and yet will put money happily into a 401k that they can't touch for 20 to 40 years, depending on their age.
I know.
And it's kind of crazy, right? And so they have no problem doing that, but this seems like it's too long. And I think it goes back to something that you just said before, that he cautioned that, I like that point that you made, that just because not everybody else is doing it doesn't mean that this isn't a good idea. And I think that that's a holdup that a lot of people have. And I had that. And we've talked about this so many times. Man, I don't know anybody else that does this. There must be something wrong with it. What I kind of had to do was almost lay out all the attributes and benefits and, down, things that I thought might be negative about this. Just kind of put it on paper and look at it objectively and set aside the fact that I didn't know anyone else that was utilizing this. And it just
Yeah,
made
you
sense.
definitely,
It
yeah,
just
you
made
definitely
sense. And I'm
had.
like, okay, I guess it doesn't matter that no one else is doing this. Why would that prevent me from doing this? And it has been really fun for me to have these systems in my life because it is pure freedom, like you just said. Every time I take a policy loan, I'm blown away by how easy it is. I could do whatever I want. No one asks me what it's for. The money comes quickly. The terms are better than anything that I can get on the open market, whether it's a personal loan, home equity line of credit, and it's there anytime that I want it, and it's growing.
Yeah, I think, like I've said in the past, so I totally agree with you on. I think that's the reason that there's like a split personality. This one seems like, hey, I don't want to tie up my money for so long, or I don't want it to take that long to recoup every access to every dollar that I put in. Or hey, this rate of return, the way the policy grows is not as good as what people tell me or what I think about the stock market. But I do think that that's the reason that they're okay with the 401ks, because everybody's doing it. And
Mm-hmm.
then we've got the tax man wagging the dog, so to speak. I love that saying. I don't know why. And so hey, I'm taking some of my income off the table because I'm putting into my 401k or IRAs, what have you, and I don't have to pay on as big a pile, so my tax bill is going to be lower. And then I've been told that I get free money from any amount that's matched by my employer, but that's not well explained either, because it's been shown that you can lose all of that through fees and so forth. You can lose the actual match dollars over the lifetime of your um, of your speculation, not your savings. I say it's speculating. You're speculating in the market that you're going to get what you want out of it, and it's not securing the accumulation of your capital and your savings like you can do with a permanent whole life insurance policy. And so, yeah, I mean, it's all these other reasons that seems like, well, that's why I'm okay locking my money up for 20 to 40 years. But geez, I don't, if everybody was doing permanent whole life, and we also had this option to do some savings through work, we might say the opposite. We might say, oh, why would I do that when I can do this, and then I can leverage it throughout my life, and then it becomes my personal pension, my retirement. Why would I lock up my money for 20 to 40 years? But that's not the way people think. And that's what we're trying to say. There is another way, and you're not crazy for thinking that way, that, hey, I should do this thing as opposed to what everybody else is doing, or the majority of people are doing. And And the people that are doing this are very happy with it.
So
Very happy.
I don't know anybody, and I've met not in my personal life, like, in my personal sphere physically, but I now know a lot of people, a lot more people that practice this, just through being an NNI practitioner and just, getting exposure in the industry. I don't know anybody that's like put this into practice and then has said after a little while, and I regret this, and I'm just going to stop doing this and go back to doing what I was doing.
That's
Um,
so true.
well, I just don't. I don't. I doubt
No,
you
it's
do
true.
too. But I,
Yeah.
I, and we're not here to say that 401ks are. I mean, we have our own opinions about that, but if you want to invest in your 401k, that's fine. It's a totally different asset class than a whole life insurance policy. We're talking about tax advantaged, leverageable savings, basically, with a death benefit. Completely different beast than an account that has your money in stocks and bonds. Just not even comparable. But um, I brought that up just to kind of show the point that it's kind of silly how people think about these things sometimes. And to kind of really be successful with this, it requires opening one's mind. I mean, for a long time, and I'm just talking about my own personal experience, I had a problem with like a 401k, but yet I invested in it. But like there was always things about it that bugged me and nagged at me. And it was like, but that's all I knew. That's all that was available to me. And I'm somebody that is very financially disciplined. I like to save. I wanted to set aside for retirement. And that's what everybody told me to do.
Yeah.
And it really took a lot of effort on my part to try to open my mind. Like it wasn't like it just happened. I had to really actively work on that. And Nelson talks about that too. And thank God I did, because now my life has really changed. I mean, I've been able to use our family's policies to um, to pay for larger expenses, to take advantage of opportunities, to make more money when I see them. I don't, it's kind of really opened up a whole new, it's opened up like a whole new chapter in my life. And I'm still, relatively very early on in this journey. And I can't wait to see what comes as I continue on with this.
Yeah, me too. I hope I live long enough to see it, Doug. To see what what
Well,
happens with Doug's life, you know? And my clients, I feel the same, right? I want to live long enough to see that, yeah, like, wow, what a great decision this was, right? That, look at all the things I was able to do that I wouldn't have been able to do necessarily if the same things if it was put into 401ks. But I wanted to mention something that I had done some research on, where there's a maximum amount that you can put in, and I might have said this on other podcasts, but I'll say it again, that it was two different studies, maybe like 20, say 15, 2016, and then 2019. And I haven't looked it up recently, but that those that have the ability to put money into a 401k have access to one of those plans. Only 13% that do contribute actually contribute the maximum amount that's allowed by law. And why is that? Why would you say that only 13%? And I don't know how short it is of, let's just say it's 20,000, which of course it's higher, but I don't know what the percentage get to, 80% of that, or, 50% of that. Um, but why would you say that people do not max this out?
because they're not forced to. I mean, they have the ability to contribute what they want.
Yeah, they're not forced to, and they probably say, I can't lock up that much money,
Yep.
right?
Yep.
I I just like they might think, and with this life insurance, right? I don't have access to every single dollar day one, to leverage it. Um, but for example, let's just say you put in 6% and you're making 100,000 and they match, 50% on that. So okay, that was the maximum match. So I'll put in, so I get the full match amount. And so, but why on if I really thought this was great and I thought that it was going to be, I was all about my retirement savings. Why wouldn't I want a bigger pile at the end of my life, right? Well, because the consequence of putting more in is that there's more that you will never be able to use. Well, I say never, but small amounts, maybe in loans that you could take from your 401k or something. But let's say by and large, it's tied up.
Mm.
And you're only putting in your 6,000, and they allow you to put in over 20,000, more than twice as much. You know,
Yeah, I mean, there's a forced savings aspect
three
to
times.
this that's really nice. And I think if we were trying to sell people life insurance policies and we were telling them, hey, I mean, it's got all these benefits, but until you're 60, we're going to penalize you every time you take a policy loan, we would have a pretty hard time putting that into place, I think.
Well, and I think that bleeds into this section. It's not what Nelson talked about, but it's the cost. It's the cost of your retirement. The cost is that you have to go out and jump through all those hoops to acquire financing from somebody else, because you can't get at all the money that you are storing, supposedly storing, but you're risking in mostly in mutual funds and so forth. But you can't access it. So you're running around doing all the stressful things you just talked about when you first got a mortgage, and what I talked about. And it's because I don't have access to 100,000. I might have access to take a loan of maybe maximum 50,000. Um, but what if, I wanted to buy my house? What if I did this before I bought a house and I had enough uh, cash value that I could borrow all of it to buy my house? Again, maybe discipline to the point where you're saying, yeah, mom and dad, sorry, mom and dad, but can I live in the basement? Can I live in the room down the hall? Can I
Yeah.
and save the money in your policy? Put the premiums in there, and then you don't have to wait till you have every last dollar for your purchase. But what if you could, and then you go and pay it back, and you've got access to all that money again, and now you own the house outright. I mean,
Yeah.
you own it
I,
outright from day one, right? Because you don't have the mortgage companies, the insurance company putting a lien on your house. You, in
right.
essence, have a mortgage against your death benefit, is what you have.
I joke
And
about that with people all the time. They're like, "Oh, do you own your house?" I'm like, no. Or, yeah, do you own a house? I'm like, no, the bank does.
yeah,
But
right.
and
We
that's the
all joke about it.
that'd be like the ultimate goal, right? To be able to do something like that. Please realize if you're listening, most people it would take a long time of funding a policy to get to that point. But along the way, you could buy cars outright. You could pay cash for that. You could fund other large expenses. You can take advantage of investment opportunities and the whole time be building up to the point where you could do something like buying a home. And when you get to that point where you can pay cash for cars or you can pay cash for your house, you can negotiate much better terms. Like I guarantee you, if I was to go onto a car dealership right now and say, I'm going to pay you cash right now, I could get a much better deal for that car, total dollars wise, than I could if I was going to get financing through that dealership. Guarantee you. Same thing buying a house. I'm going to put in an all cash offer, not contingent on bank financing.
Right. No
you know?
matter, even when there's hot real estate markets, there's always some opportunity that comes along that if you had cash, you can take advantage of it in ways that other people couldn't, because the seller doesn't want to go through this process of waiting for you to secure financing, and then maybe you don't secure it.
Oh,
They
I've
don't.
seen that on Zillow so many times. Buyer financing fell through back on the market, you know?
Yeah, and so of course, if you were selling a property and somebody came to you and said, I can close in a week. I just got to work with my attorney and have them work with yours, and then whatever, and then just, yeah, I've got the money, and I can even show you that I have the money. Um, I can take a screenshot, share it with you, say I've got all this money available to me. And wow, you definitely, if one person had to go get financing and another didn't, and you were in need of one, or desire of selling the home quicker than later, yeah, you're going to be interested in Doug over John.
Mm-hmm.
And yeah, and I look at it that way, right? It's a real opportunity to have, um, back to that golden rule, right? Is I have the cash, so I, I'm going to see opportunities in a way that others don't, and I don't feel as risky about it, right? I don't take risk, and I don't feel like it's a nerve wracking thing, because I can just be at peace and make hopefully a sound decision on maybe how I expend my money and invest my money and take advantage of things that come along. I don't have to be like speculating about it. So
Mm. Yeah.
yeah.
Well said.
Yeah. Yeah, well, back to, I think your son has a shot at being one of those people, depending on when he decides he wants to buy a house or condo or whatever,
Yeah.
right? Is not only does his parents have these banking systems, but he's going to have a branch of his own personal branch, you know, that you've started for him, and he might be one of those guys that can just buy his first home like
Yeah. I
that.
mean, even when I look at his policy, I mean, and we'll hopefully get
More.
another one on him at some point,
Yeah.
as our policies grow. But when let's say he follows our kind of trajectory and gets a house in his late 20s, he could, and again, I have no idea where real estate prices will be at that point, but he could fund a decent chunk of that at least, um, and then potentially take a loan from us, where he can have access to solid capital on our end, um, and and continue to make the family banking system strong. So
Yeah. I mean, I think we talked about it. Um, One of our colleagues, James Nethery, had interviewed this gentleman whose son bought a piece of real estate in a different state that he lived in, and then he became a state resident for tuition purposes when he went to college. And then I think shortly after he graduated, he had a younger brother that he sold the property to, and I don't know what the profit margin was, right? But think about the fact that this helped him reduced his costs because he became a state resident, and then um, he refilled this bucket of money. But if you had been, which his father had started these policies, right? So he borrowed the money from his policy, against his policy, and then bought this property in the college town. And then he had renters, he had captive customers community, and that paid for the loan. And then he had access to that capital again, and then he also sold the property. So not only did he, he restored all the money into his policy, and now he's got a college education that basically was, in some ways, much less expensive. And I don't remember if he had loans or not, but then now he's getting, plus he had annual premiums. And so he had a bigger pile, and then he could go off, and not only did he help pay for his education, maybe all of it, really, I don't know exactly, but then have the access to the money again in a larger pool. And now he can, with the same pool of cash and more, he can buy a house, like whether it be, right away or, just keep accumulating, and then maybe 5 years down the road, settle somewhere and say, yeah, it's time I want to own a home. And that's the idea is, everything costs you more if you don't have access to capital. And that's the cost of acquiring it, is the fact that I'm beholden to other people.
Yep.
For this financing.
Sure.
Right?
Yeah.
And what it takes to acquire it is a cost to you, whether it be numbers, dollars, or or
time too. I mean, if you want to get a house and you can afford it, but you don't match the bank's necessary like debt to income ratios and stuff like that, you got to go work on that for a few years and then come back. So,
and you might be looking back and going, oh wow, that was a golden opportunity, right?
Sure.
But I couldn't take advantage of it because I hadn't done this other thing, right?
Yep.
And the parents haven't done it for you. They haven't taught you because they didn't know it. But I always say, when people ask me is this too late for me? I don't think it's ever too late, because at the very least, if you have others to share it with, especially family, loved ones, that is huge, right? Because if you think it's got any value at all and you're questioning whether, geez, is it too late? Because that means you are thinking, oh, geez, sounds like a great thing, but I think maybe too late for me. Well, then clearly think about those others, right, that would benefit from you getting started. And you might even put the policy on them, if you can. And then teach them, right, what, that's a great legacy of wisdom, of insight, is one of my sons says to me, Dad, that's all I'm looking for, is some insight, from your experience. It sounds a little bit overconfidence to call it wisdom, but certainly you've got some insight to share, and then what people do with it is their prerogative. But yeah,
love it.
Yep. Okay.
You got anything else?
I think that's pretty good for today.
Yeah.
So
good.
How about yourself?
Anything? No, that was great.
Okay. All right. Well, thanks for listening, everyone. And Doug, have a great day. And we'll talk.
You too.
If we don't talk in a week, we'll talk sooner.
Okay. Sounds good.
All right, buddy.
Bye.
See you. Bye.
Thank you for joining us for another episode of the ABCs of IBC.
If you enjoyed listening, please hit subscribe and leave us a 5-star review wherever you listen. It really helps. See you next week.
Bye.